On behalf of Dodla Dairy Limited, I extend a very warm welcome to everyone joining us on our call today. I hope everyone has had an opportunity to go through the financial results and investor presentation, which has been uploaded on the stock exchange and on the company's website. After a solid growth in financial year 24, we are delighted to continue to scale new heights as we begin financial year 25 with a record-breaking performance. During Q1 of FY25, results set new benchmarks, delivering our highest ever performance both in terms of revenues and profitability metrics. The quarter's performance has been broad-based with all the key segments including India, Africa and Orga Feeds surpassing all previous revenue milestones. Further, this growth has been bolstered by higher sales of value-added products which accounted for 35.4% of our total revenues. This is again in line with improve our product mix. The distribution network, overall efficiency, market reach and brand recognition. On the gross margin front, we saw an improvement thanks to a better efficiency in milk procurement from the farmers, which in turn helps us manage raw material costs. Aligned with industry trends, we implemented a strategic price reduction in milk prices aiming to sustain robust volumes throughout the year. Additionally, we are also focusing on improving operational efficiency at every level of operation with the help of automation and digital initiatives. With the beginning of the flush season, we expect the industry to experience healthy procurements until the end of Q2. Going forward, we are focusing on capitalizing the positive momentum by following a multi-pronged strategy encompassing expansion of our portfolio in terms of product catalog as well as footprint, growth in African markets by gaining more market share by expanding our product reach, strengthening our relationships with our farmer partners while growing Orga Feed. Over time, this will also help us improve our cash flows. Better brand awareness through branding and advertising activities. We are also placing advertisement in high traffic areas and we are creating tasty experiences at various trade events. With this brief, I will now hand it over to CEO of our company, Mr. B.V.K. Reddy, and thank you all very much. Mr. B.V.K. Reddy.
Thank you, Sunil sir. So as Mr. Sunil Reddy stated, so this has truly been a phenomenal quarter with the business.
The person you are speaking with has put your call on hold. మీరు మాట్లాడు
Sorry to interrupt you, sir, but your call has been on mute.
With has put your
Ladies and gentlemen, we have lost the management line connection. Please stay connected while we reconnect them. Thank you.
We are trying to reach out, madam. There is a signal problem. Just a minute.
Working capital. Networking through various initiatives that prioritize the farmers' interests, such as a fair milk pricing, access to quality cattle feed at a competitive price, timely veterinary service, and several additional programs for the dairy farmers. So I would now request Mr. Murali Mohan Raju to share his financial highlights for this quarter.
Okay. Thank you. Thank you, Mr. B.V.K. Reddy, and very good afternoon to all the participants on the call. Talking about our quarterly performance in Q1 FY25. The revenue from operations came in at 912 crores versus 823 crores in Q1 FY24. In the quarter, our gross margin improved by 543 basis to 29.1%. This is mainly driven by lower procurement cost and revenue mix. Employee expenses increased by 13.1%, primarily due to annual increment and addition of employees in Kenya plant and Nagarjuna plant in Kuppam. Other expenses increased by 21.1% on a year-on-year basis, largely on account of higher procurement, advertisement, and promotional expenses, and also storage rents of it. But
and how much cut you would have taken?
Comfortably maintain the current gross margin.
How much price cut you have taken till now?
Depends on all the product ranges because we have a whole range of products. Maybe a couple of rupees there and there.
Okay, understood. That's very helpful. That's all from my side. Thank you.
Thank you. The next question is from the line of Aditya from Securities Investment Management. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Sir, were there any inventory losses this quarter?
Come again, Aditya?
Were there any inventory losses this quarter?
No losses as such. I think we have, we're keeping with the same policy of whatever we do for our NRV. We are continuing with the same policy. So we are just maintaining there's no losses in inventory.
Understood. And now, sir, if I look at the standalone P&L, so there has been a decrease in gross margins between Q3 of last year and current quarter. The procurement prices from then to now has come down, and the share of that in this quarter is higher than the December quarter. So ideally, the gross margins should have increased. Also, if I compare the same with other two South-based players, their gross margins have also increased during the same period. So if you could explain why the gross margins for us have seen a drop. You have mentioned that you have taken some price cuts, so it would be helpful if you could just help us understand what would have been the decrease in procurement prices from Q3 to Q1 and decrease in realization price from Q3 to Q1.
So I think the specifics Murli will give you in terms of the procurement price and the sales realization. But also there is a difference in terms of the product mix that takes place, which sometimes shows the reflection in the margin in terms of we have multiple ranges of milk or full-free milk, whole milk, and others. So I think with that also you will find a slight difference. But I think Murli will give you the specifics in terms of the procurement price and the sales price. Murli, can you please go ahead?
Yeah, sure. So the prices, the margins, like we mentioned, 30% of earlier, we have at 29.1%. Basically, the reason is the product mix. And as you see, historically, Q2 and Q3 have a better margin than the Q1. That's one thing. Apart from that, the product mix also matters. And also we have a geographical mix, which also matters. So we have operations in Kenya, Uganda, and also in India. So combined, all these things also, product mix will have a difference. That's why the gross margin will have a minor variation. We won't see any major shift in this thing. That's what.
I was talking about. Added to that, sir, one more issue also. See, if you see last year, Q1, Q2, Q3, Q4, sales realization keep on increased. Even see, when compared to Q1, Q2 was sales realization is more. Compared to sales second Q2, so Q3 also more. And Q3, Q4 more or less the same.
Yes, sir. So like, I'll just explain, like Q1 of earlier, our gross margin 23.0 increased to 29. So second quarter is 26.8, third quarter is 30, fourth quarter is 27. So when you are comparing the peak, so that will not be repeated in all the quarters of the subsequent year, because it is based on the seasonality. Quarter on quarter, the variation will be there.
Product mix.
Yes.
So I thought that Q1, where the share of VAT is higher, so ideally the gross margin is the highest in that quarter. So sir, if you could just provide me the realization and procurement price in Q3 of last year and Q1 of this year for India business.
I'll do. The procurement of last year, you want a Q3, it is 37.67, sir, and realization is 57.49.
No, Murli, that is, he is asking, standalone. Standalone Q3 is 38.71, sir.
Yeah.
Okay.
So Q2 is 39.0.7.
Hello.
Answer your question, sir? Yes, sir. Last year, standalone Q2 was 39 rupees 7 paisa. Q3 is 38 rupees 71 paisa.
And Q1 of this year, current quarter?
Q1 of this year, yes, I will tell you. Q1 of this year, 31.45.
Yeah.
31.45. This is standalone.
Okay, and realization?
Realization, so Q1 is 59 rupees 56 paisa.
Okay. And sir, how are the procurement prices trending now? So generally we see a spike in Q2. So this year, have we seen similar spike or the procurement prices have been stable?
If you see last year, more or less first quarter, second quarter, third quarter, more or less, very close. There's only 10-20 paisa of the variation. Except the fourth quarter, slightly it is down. This year also the first quarter 35-45. Now more or less it will remain same.
Understood, sir. And sir, now our Africa and our Orga feed has seen good growth this quarter. So what is the revenue outlook for both of these business in FY25?
FY25 in the first quarter revenue is, Africa is 83 crores, 83.6 crores.
Yeah, so I was asking about the revenue outlook for the whole year. What kind of growth are we anticipating for both these businesses?
Yeah. See, that, last year I think we have done.
Last year around 82.8, that is approximately like started 83 crores. We are expecting this year it will be almost like double, Aditya.
Aditya, I will tell you, last year we have ended the year 218 crores. This year we are expecting roughly about 360 crores.
So that is for Singapore, sir.
No, Singapore console, that's what I'm talking. Africa means Singapore console.
Okay, sure. Look. These are also
Aditya.
Yes.
218 we have ended last year, ended March we have done Africa console revenue.
Right.
And this year we are expecting 360 crores.
360 crores. So we are seeing a good
145 crores jump.
Understood, sir. And for the Orga feed business?
Orga feed we have done 82 crores ended March. And this year we are expecting around 160 crores. Double almost. 100%.
Understood, sir. And sir, what is the inventory?
I request you to come back for a follow-up question. Thank you. The next question is from the line of Rishabh Gang from Sacheti Family Office. Please go ahead.
Hello, sir. Am I audible?
Yes.
Yeah, thank you, sir. So my question is more on the procurement side, right? I want to understand some qualitative insights on what has been the key steps and initiatives in the past, and also going forward on how you have increased your scale of procurement, right? And how you plan to increase it going forward. Yes, sir.
Going forward, earlier, we used to have always shortage between sales and procurement. Summer months, we used to run short of milk and we used to buy from third party. That now, we have geared up, we have increased the procurement. Now we are, even in the peak summer also, we have a procurement equivalent or slightly more than the sales.
Okay.
Now, in tandem with the sales, our procurement always, 2-3 lakhs higher than the procurement, higher than the sales.
And how have you been able to do that?
Tell me, sir.
So
how have you been able to do that? Like, what are the initiatives?
Initiative, depending upon the initiative, depending upon requirement, we will plan well in advance. See, we are there in Andhra, we are there in Tamil Nadu, we are there in Karnataka, we are there in Maharashtra. So, depending upon the price structure, depending upon our closer market proximity, we make a plan well in advance 6 months. We'll keep things ready as and when requirement is there, we will start.
So any particular
increase the area by the spread or go into depth depending on prices. So certain areas where we have more strength, we try to get more into increasing at the per village level by doing more activity, like you were saying, when we are giving better service to the farmers, our depth is increasing. And certain areas we go by more of it. We have a lot more areas to cover. For example, Maharashtra, which was not there a couple of years ago, we went into Maharashtra. This is how we grow by also spreading the area of operation.
Got it. Okay. Also on the branding and marketing strategy, what have been your initiatives, right, for spreading the awareness for people, for making people move buying milk from unorganized sector to buying from organized sector? And also, how does your brand differentiate as compared to other private sector brands or cooperative brands in your main regions such as Telangana and Andhra Pradesh?
I think there are certain areas where we are already a brand in terms of the tier 2, tier 3 cities. We have a large presence, some places where we have 30-40% market share. It is basically done to reinforce the brand and to keep it going. Predominantly, differentiation in milk is done on basis of, I guess, what more than we say, because milk people will compare milk as such. But the amount of work that is done in terms of the back end of procurement, microbial quality, microbial loads, it is only that our job is to get the product into the customer and new customer to try it out first. Because once that happens, then the product speaks for itself in terms of flavor profile and consistency of quality and consistency of service. So that message is what we try to carry on by saying, look, the products are cleaner, the products are healthier, please do try them. And then we leave it to the customer's choice, and we're very confident that the quality of the product speaks from there.
Okay. So also on the distribution touch points, right? So how has the growth been over the years, and how is your qualitative initiative for that and incentive to distributors in terms of monetary incentives? Are you doing something different from the overall industry? How do you think about it, sir? Yes.
I think the overall industry always maintains a similar pattern, but it's more in terms of the efficiency and ground reality of delivering the operation. We have multiple chains of distribution. We have our own outlets which we call DRPs, which I think Murli will give the specifics in terms of numbers. We also have distributors, we have retailers, and then the modern trade. We are now trying to move a lot more of the product into the modern trade profile, coming from more of a visibility standpoint of view, and use a blend of all these. So it depends on certain areas if you're not able to get penetration for whatever the reason be. We use what we call as Dodla retail points as an ability to go get our penetration in there. And certain areas where we have now become stronger, we hand over the operations to distributors who then take care of the operation. We monitor the growth and see how we are able to penetrate. If you need specifics, I think we will be able to give you the numbers.
Yeah. So we have a distributor channel, agent channel, DRP, and modern trade and institutional and direct. So 50% of our business will come from the distributor channel, 26% comes from the agents, and our own distributors, DRPs, what we call Dodla retail tariffs, is around 17%. Balance around 2 to 3% from the institutional. Yeah.
Also, almost the same thing. Private sector is a little higher compared to the cooperatives, but I think the structure in terms of commission among all the channels remains the same, and with the cooperative, the competitors also the same. It's only the product that has to be there on time, delivered on time, and availability.
Also, for new markets, right? Do you think about going through B2B way first, or maybe going through a quick commerce strategy? Like, do you also sell products through platforms like Swiggy, Instamart, or Blinkit, which can help in building a brand in the locality first, and then maybe you can start building the distribution there? What do you think about that, sir?
So basically, online as a channel is not yet big for milk per se, because of the perishability. The numbers are still smaller. We are present in those online channels also. Majority of it, because dairy industry per se has been one of the few industries way before even a Blinkit came into play, was doing deliveries at home. I mean, most of the milk packets to the consumer are delivered to their doorsteps in an older overall system. The newer online channels are made more in terms of convenience that has come forward. As we go forward, I think it will further improve in terms of online distribution being handled not only by the omni channels, but I think the dairy industry also trying to make it become more customer friendly in terms of consumer being order placement and taking it forward. But we will prefer going a lot more to the B2C rather than the B2B, because we try to differentiate on quality and try to command a bit of mass premium on the product that we are selling. So our concentration is more on B2C and less on B2B.
Just last question from my end. What do you think about the attractiveness, right, of eastern states of the country, like West Bengal, Jharkhand, Bihar? Do you think these are markets which deserve our attention?
As we go forward, yes, sir. But normally when we look at it, the south and the west of the country where there is more of a GDP income coming in, people do not mind paying a little bit of a premium for the product quality or what they want it as in terms of convenience. The eastern part of the country is still the GDP front a little lower, so people there are more price conscious. So we cannot command that kind of premium to increase margin. Yes, that will be the future growth for the country as that part of the country starts to improve. It will also come and give us the margin. So we will be entering into those markets as and when opportunities arise.
All right. Thank you so much, sir. I will come up in the follow-up. Thank you.
Thank you. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address the questions from all the participants, please limit your questions to 2 per participant. Thank you. The next question is from the line of Arpit Shah from Stallion Asset. Please go ahead.
Hello.
Yes,
hello. Yes, am I audible?
Hi, Arpit.
Yes. Yeah. So I'm just a little new to the business. Just wanted to understand, let's say the difference between the procurement and the sales, that is the part which we divert to VAP, right? Hello.
That is the part, come again, Arpit, that is the part which will divert to VAP.
Yeah, which we divert to, that is for our captive consumption for VAP products. Is that right?
No, sir. See, the surplus milk, always, milk, you have a low fat milk, medium fat milk, this and that, whatever surplus fat in between you take out, that we will sell as a ghee or butter. And during, flush season when you get a surplus milk, because, day to day, you can't precisely you collect the same milk for the equivalent of your sales. So always you could be more milk during flush season, that will convert into powder. Some will consume for internal consumption, excess will sell it in the market.
So that difference is what we sell outside, or how is it?
No, we'll sell outside. Whatever, after internal consumption, we'll sell outside open market.
Okay. Because if I see the procurement, that is 17.6 lakh liters per day, and milk sales is 11.3 lakh liters. So difference is about 5 point something odd. So that is what we're going to use for VAP, right?
No. The curd also will come up to VAP. So basically, curd, 4.67 tons in a curd is there. It means 11 lakhs milk, 4.67. It means, it has become 15.6, 15.7 lakhs.
Okay. The curd is not part of that, right?
Yeah. And also in the sales will vary. Like 4.2 average of what we procure. We sell around 4.5 because we have a full cream milk sale and curd and all this stuff. Even if it's even solids, that is we call it solids not fat, that we procure around 8.5 and we sell beans around 9%. That's how the solids will go high.
Got it. Not a problem. And we just wanted to understand the kind of margin that we have done. That is probably one of the highest margins that we have done over a lot of quarters. So how should we see the margins and revenue growth for FY25?
We maintain the same standards of what we're looking at. Comfortably, our top line will grow in the same double digits that we have in the first quarter. And similar pattern will follow for the bottom line also. We are confident that for the year FY25, the bottom line will be healthy as it is in the first quarter, and we will continue to go forward in the same manner.
So you think we'll be able to report a 300 crore PAT for FY25?
Come again, so how much of PAT?
300 crores PAT for FY25. Is that the right estimate, or do you think it's more aggressive?
the specific number is not there, but we are confident we'll maintain current cash number as a percentage of the top line growth potential.
The first quarter, sir.
So sorry, I missed the last part. There's a lot of disturbance in the line.
We cannot give a specific number, but see the first quarter, what you have seen, the first quarter results, similar lines. So we will continue to do in the second, third, fourth quarter also.
Got it. Thank you so much. Best of luck.
Thank you.
Thank you. The next question is from the line of Maithili Balakrishnan from Alchemy Capital Management. Please go ahead.
Hi. Two questions, sir. One, I wanted to get a sense of the milk volume growth because that still seems to be, stuck in a low 2.5% kind of a range. So just wanted to get a sense from you as to how are you thinking in terms of volume, and when will that, grammage reduction which happened, when will it annualize and we see that, a stronger growth emerge on the volume side?
Yes, ma'am.
The grammage also we will start.
Yeah. See, in milk, you have seen only 2.5% growth, but where is, you've seen growth of 6.6%, your especially curd. So milk and curd, we should see together. See, sometimes what is happening more than milk nowadays, curd growth is higher than the milk growth. Number one. So number two, see the overall growth, see it is mostly it is growing only on curd and value-added products.
Okay. And when you say value-added products,
milk will also be muted because the surplus in the system, this always happens when we have excess production in the system. We get a lot of the cheaper players coming in, smaller time players who come in and try to enter into the market, which normally means off when we get back into the summer.
Got it. Also wanted to check with you on the consolidated, if you could give us a number for milk procurement and milk selling.
For the current quarter?
For the first quarter, yeah.
First quarter consolidated volume you are asking, madam?
Consolidated milk procurement price and milk selling price.
Okay. Milk procurement consolidated procurement price is 34.15.
Okay.
Selling price is 59.17.
59.17. Got it. So the gap which has come is almost like a 5 rupee gap as compared to what it was in the previous, last 3 quarters. Is this sort of sustainable, or do you think you will have to sort of see, as you have sort of reduced prices, you see some reduction in this spread?
I think this will continue now because we will balance it between procurement and selling prices, and we'll try to maintain similar margin trends.
Got it. Thanks. That's all from my side. Thank you very much.
Thank you. The next question is from the line of Resha Mehta from GreenEdge Wealth. Please go ahead.
Yeah, thank you for the opportunity. So on the international business, if you can just elaborate, that what is, because we have guided for, almost a 65% kind of growth for FY25. So if you can just talk about what is driving this kind of growth, what are the sustainable growth rates there, sustainable gross margins and EBITDA margins there, and do we have any capex plans there?
I will answer this.
I'll answer that now. It's basic.
Yeah. Capex, we have already done. See, last year we acquired one plant in Kenya, and that commenced production in the month of January, FY25. So mostly the capex is done. Right now, not much of capex, very minor maintenance capex, in the coming year. And the market expansion, maybe, see, since, last couple of years, we had a lot of issues, permit issues, from Uganda to Kenya, because, since we are having a plant only in Uganda, we were exporting to Kenya. So during COVID time and subsequent COVID time also, then permit issues were there. So for months, we used to permit certain months, used to put a break and all. Now, since we acquired a plant in Kenya, so I think, we will stability and some kind of numbers going forward.
Okay, and what are the growth rates, sustainable growth rates there, and sustainable gross and EBITDA margin?
Yeah, this year, maybe the growth rate, volume growth rate, we have shown little higher side because since we have started new plant. But, the coming years, maybe, 15% minimum 10 to 15% minimum revenue growth rate will be we can achieve.
Sustainable margins, sir?
Margin rate, see, it varies, but on average, it is almost double than Indian margin.
Okay, so last quarter I think was almost like around 25%. So is that also one?
Yeah, that's it. Quarter to quarter, you'll have some variation in African countries, but by and large, if I'm doing 10% margin in India, see, Africa overall, it is giving around 20% margin.
Got it. And secondly,
that's what last experience, couple of years.
Got it. Secondly, on your cattle feed business, so you said that 60-65% utilization is what we can achieve in FY26. So currently, what are the utilization levels? What are the peak revenues possible at optimum utilization?
Yeah, last year, we have done only 82 crores top line. And last year, in the last year end only, we commenced another plant, bigger feed plant. So now that is running now. See, and this year we are expecting, our turnover will be double compared to last year.
It's basically 12,000 tons a month. We have a 2,000 ton per month capacity. They've added 10,000.
Yeah.
Capacity now is 12,000 tons.
Yeah, 12,000 tons plus the old plant, is roughly about 2,000 tons. Totally, 14,000 tons. Now we are already doing 4,500, 5,000 tons capacity.
Okay, so we are at 4,000, 4,500 volume levels, right?
Yeah, yes. Plant capacity is 12 to 13,000 capacity overall, 100%.
Right. And liquid milk, can you just mention what was the price hike taken for liquid milk specifically?
Liquid milk, you're talking about standalone?
What are we going to take a price
Sorry, I didn't get that. Hello?
No.
The first quarter of this year, we have not taken price hike in standalone.
Okay, standalone Q1 not taken any price hike, right?
Yeah, from Q4 we have not taken any hikes. But when you compare year on year, there is a 1.9% of growth is there in the milk prices. Like current quarter we have done 55.9. I'm talking about only milk. And last year, the same quarter of Q1, we had 54.9%. Yeah.
Right. So the last price hike taken in milk was when?
Interrupt you, ma'am. I request
Over the period of
follow-up question. Thank you. The next question is from the line of Nikhil Upadhyay from SIMPL. Please go ahead.
Hi, thanks for the opportunity and congrats on good set of numbers. Just two questions. One is when we see the cooperatives increasing the prices while private players cutting down the prices, is it like the cooperatives are passing it to the farmers, or are they covering their operational costs through this price increase? What's your sense?
I was covering their operational costs, sir. Yeah.
Okay, at the procurement.
Because on two fronts they also have a surplus of milk which they are handling, which they'll have to offset by increasing the prices, and because of operational costs also. Earlier the difference was so large, they won't be finding it to be very comfortable now. So they have to start moving up, and which we had already taken it earlier, then we are able to manage it with the lower pricing now.
Okay. And second question, now most of the private dairies, I think 4 companies which have reported results, everyone is getting the benefit of low cost. And I think someone did ask this earlier also, but at the competition level, are you seeing price cutting or increasing grammages in order to gain volume share? Because volume growth for all the players had been very little. So are you seeing increasing competition through price increases or price decreases or grammage increases in the markets where we are operating?
The competition intensity will always remain there, but it's more of, like I was saying earlier, when you have a lot of surplus in the system, you will find a lot more of the smaller players coming into the play to make use of the low prices and try to undercut much larger in terms of pricing. which in terms of seasonality come on other year when there is a little shortage of milk, you will see the upsurge in volume growth. This is always follows the pattern that whenever there is a huge surplus in the system, we will find muted growth, and that will automatically translate a lot more when there is less in the milk in the system. So this is a normal phenomena which goes on. Competition intensity continues to remain the same. We are looking at more consolidation happening.
But sir, in this environment, how will consolidation happen when everyone is making money, and whenever consolidation happens, the asking rates will also go very high. So how do you see consolidation happening now?
It will become more and more in terms of more efficient players will survive. So like the four that are existing, we have a lot more of smaller players who are there all over the states that we operate. It is either due to management fatigue because of not having proper systems of people in place, coming to variations and volatility of the pricing that will happen. And third comes in also with the working capital. Like for example, if there is a surge in the current year when we were able to hold on because we have capital with us, we are able to deploy our working capital well and efficiently. It helps us. Whereas a person who doesn't have that ability will find it to be strenuous. So in a multiple of reasons, it will start to consolidate.
Okay, fine. Sure. Thanks a lot. I'll come back.
Thank you. The next question is from the line of Vinit Lambu from HSBC PMS. Please go ahead. Mr. Vinit, your line has been unmuted. Please go ahead with your question. Mr. Vinit, your line has been unmuted. Please go ahead with your question.
Sorry. So my question is regarding the EBITDA margin for the milk, plain milk, and the value-added products. Like, what would be the margin? Like, and the
value-added will be higher. Murli, can you give the specific answer, Murli?
Yes, sir. Sure.
In value-added product margin.
Yeah. Milk, generally, it ranges from 7 to 8%. And value-added products, the EBITDA will be around 15%. And in that, the buttermilk, lassi, and the curd will have a higher margin. And the ghee and butter will have a moderate margin around 5 to 6%.
So curd typically has the same margins, like, or else it belongs to value-added products.
Same have a curd is a value-added product. It will have a higher margin. It is almost 60 to 70% higher than the liquid milk margins.
Okay. So can I assume that this would be the share would be the same, value-added product 35% and plain liquid milk at 65% for overall FY25, or it would vary, like on an average for FY25?
Yeah, there will be a little variation will be there because of the Q1 generally our value-added products will be little higher side. But keeping of our future strategic plan and all that stuff, we try to maintain that.
So can you give me the number, like for on an average, not a particular number, but a range of like maybe with 3-4% for the plain milk and liquid milk?
Yeah, like FY23.
Here, this financial year, since we are holding, enough stocks, especially butter and SMP, definitely the value-add portion will be higher than the last year. So plus or minus 1% this way, that's why value-add portion will be roughly about 33-34% this year.
Oh, 33-34% with 15% EBITDA margin for the value-added product.
Yeah.
Or can you give me range for this 33-34%, or 15% is a right assumption?
Yes.
Yes.
It might be a slightly lower than 15 because we are including butter and ghee into it. It will maintain the range of between higher than milk, but maybe over 12-13% kind of range.
12-13% is a right assumption for whole FY25.
Yeah.
Okay, and 7 to 8% remains similar for the liquid for the whole year.
Yeah.
Yes, that would be the trend. Yes.
Okay. Okay, fine. Thanks. And what would be the growth rates on revenue?
We'll maintain the same numbers as the first quarter, although we'll have a little bit of product mix variation. I think for the overall year, we can guide on the same what we have seen in the first quarter, sir.
Okay. And same remains for the profitability, so 40%, 45%, or?
Remain for the profitability also. It will be slightly maybe lower by 0.5% this year, that way, but it will maintain the same.
I couldn't get it. Like, you're talking about the PAT or EBITDA?
EBITDA margins will maintain the same. EBITDA and PAT for us will almost go in same sense.
I'm talking about the growth. For the PAT and EBITDA.
Growth?
For the FY25.
For the PAT and EBITDA growth, if you compare year on year, will grow with around 10 to 50, high double digits.
I didn't get you. 10 to?
Yeah.
Double digit.
Probably 20% will be EBITDA and plus or minus even the PAT also similar number.
Okay. So 20% EBITDA growth for FY25 and PAT what similar range, 20%.
Yeah, similar range. 18 to 20 you can take a ballpark number. For both EBITDA and PAT, revenue will be around 10%, which will be a mix of volume on the price and also the product mix.
Okay. Thank you. That's it.
Thank you. The next question is from the line of Falguni Datta from Manasrovar Financials. Please go ahead.
Yeah, good afternoon, sir. Sir, could you just repeat the milk procurement prices for Q4 and Q1 and also the milk realization?
Is it consolidated or is it standalone?
Standalone.
Yeah, standalone Q4 procurement price is 36.91 and Q1 is 35.
Just a sec. 36.9 for Q4.
Q4 of procurement 36.91 and Q1 of procurement price is 35.45. And with regard to the sales realization, we have 55.45 versus 56.54 in the current quarter.
55.45 in Q4 and Q1 would be?
57.82 Q4, 57.82 of Q4 versus 59.56 of the current quarter.
59.56 current quarter.
Yes.
Yeah. Okay. And sir, one more question is, this is the first time that I'm following a milk company, so pardon me for the basic question. Is there a seasonality in the milk procurement prices if we go by Q1, 2, 3, 4? Is there any trend?
Yes, because I will explain.
There needs to be seasonality available.
We have a trend, yes, yeah, normally, we'll have a trend. Last year, if you see, more or less, first quarter it is 39.62. Second quarter also 39.07, roughly about 50 paisa was variation. First quarter to second quarter. Second quarter to third quarter also there is a 50 paisa variation. So third to fourth quarter, there is only 20 paisa variation. There will be some variation quarter to quarter.
But normally there is not a big change generally quarter to quarter.
Yeah, so last year, if you see last year, only 50 paisa was the variation from quarter to quarter.
Okay. And sir, can you just refer me to someone in your company from whom I can just get a handle of the basic activities in the milk industry? I mean, operationally, if I have some basic questions, whom can I get in touch with at Dodla?
Yeah, Mr. Murli.
I'm the right person. You can contact me.
Mr. Murli?
Yeah.
And sir, can you just give me your any landline number so that I'll just get in touch with you?
Okay. I will message you.
Okay, fine.
On the investor presentation you have, otherwise.
Okay, I'll do that. I will.
You can note down 4546.
Yes.
7777.
Sorry, sir. 45.
46.
46.
57. 4547.
7777. Thank you so much, sir. Thank you.
All the details are available, contact details in the investor presentation also. You can mail it also to get it specific. Yeah.
Thank you. Thank you. That's all from my side.
Thank you. The next question is from the line of Binoy from Sunidhi Securities and Finance Limited. Please go ahead.
Yes, sir. Thank you for the opportunity. Could you help me with the milk procurement volume for the India business in Q1 FY25?
Q1 FY25, you want the overall milk volume?
Yes.
Yeah.
Procurement volume.
Yeah, 15,96,000. 15,96,000 is standalone India first quarter procurement.
Understood.
Console 17.6.
Sorry, console is 17.6, right?
6, yes.
Yes.
Okay. Sir, so in Q4 FY24, we took a inventory write-off of roughly about 23 crores. Is there any write-back of this inventory in this quarter?
Only, not write-off.
No.
Not a write-off. We actually wrote
market value. Yeah, sorry. Yes. Continue, sir.
No, go ahead.
Can I go ahead? Okay, thanks. Sir, when we compare with the market value, because it's whatever we use for internally, that we will not have any return down value. But if we are having any excess stock which we are marked to market, when we do it, there is a provision we made for 23 crores in the Q4. And for that, we have further increased by another 10 crores, keeping we have the latest rates and latest stock availability. Yeah.
So you're saying essentially you provided another 10 crores in this quarter?
Yes.
Yes.
Another 10 crores we provided. As a conservative approach, we take the yeah.
Understood. Sir, Maharashtra state government has actually announced some 5 rupee subsidy to the cooperatives and private dairies. So if you could just help me understand the mechanism of this subsidy and when does this start?
Yeah, they started, this month 11th onwards.
Mm-hmm.
July 11th onwards only they started. See, earlier, all the private dairies, they were paying procurement price to the farmer only 27 rupees. But the government said, you make minimum 30 rupees as a basic price, and then the government will give you 5 rupees subsidy. So subsequently, after a couple of discussions with the government, all the dairies also started paying 30 rupees, and the government will be adding another 5 rupees. See, that is effective from July 11th onwards.
Understood. And this, so 5 rupees will be paid by the government to the farmer directly, or will 5 rupees be paid by the government to the private?
No. Farmers, see, they pay directly to the farmer account. And people who are having, direct farmer account only are eligible to get this.
And we also upload all the bank statements, the payments, farmer-wise details in the portal. So based on that, they could able to get the 5 rupees from the government. So like Sar is mentioning, when we procure directly from the farmer, then those people only will get a benefit. Who are buying through the agent.
People who are only getting, people who are getting milk direct through farmer account and making payment to direct farmer account only, it will help to get that government amount.
Yes, sir.
Understood. So net realization to the farmer will stay at 35. If the understanding is correct, right?
Yes.
Understood. Okay. So second is that on observation. So, this Q1 is typically more or less lean season, right? The flush season is just about begun or yet to begin in Q1. So when we look at the milk procurement volume in India business, sequentially also there is a higher milk procurement volume. So anything to read, and in the con call you made a statement that the milk procurement prices will stabilize at these levels, while the actual flush season is yet to start or has just, in July would have just begun. So shouldn't the milk procurement prices fall further from these levels, and you will also have a very good flush season going forward in terms of the total volumes?
Yeah, this year, unlike, last year and previous years, this year, flush season started little early because the monsoon onset, started from May 10th onwards, especially in southern part of India. So that's why, instead of second quarter, the first quarter itself, the procurement volume has gone up. And subsequently, the second quarter may not be more than the first quarter procurement average. If you see last year, my second quarter procurement to third quarter procurement, there is a variation of 70,000 liters. Second quarter, 15.96. Third quarter is 16.66. Then the fourth quarter has become 15.46. So now, the first quarter is 15.96. And the second quarter, you may have a slight variation, not more than 16.5 lakhs.
Okay. And do you also see the flush season peaking out in the second quarter, or will it run down to the third quarter?
It will run down to third quarter.
Okay. So overall net you will have a longer flush season.
Yes.
Okay. Sir, my last question, could you help me with the overall sales volume for consolidated and India business for quarter 1 of FY25, quarter 1 of FY24, and likewise quarter 4 of FY24?
Yeah. See, if you take, consolidated, if you see quarter 1 of 24, 15.75, and quarter 2, 14.15, 13.77 quarter 3, and Q4, 14.68. And FY25, Q1 is 16.45.
Okay. And likewise for the India business?
India business, if you see, last year, FY24, 14.53, 13.14, 12.81, 13.41, and FY25, 14.80.
14.80. Okay, thank you so much. That's all from my side.
Okay.
Thank you. Ladies and gentlemen, we'll take this as the last question. I would now like to hand the conference over to the management for closing comments. Management.
That's sir.
Yeah, thank you everyone for joining the investor conference, and wishing you all a great day ahead. Thank you very much.
Thank you, Anurita. Thank you, everyone.
Thank you all.
Thank you. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.